I'm Joe Benaroch, Head of Media Partnerships at the New York Stock Exchange, and you're watching Taking Stock.
An intraday reversal here on this trading Wednesday here on Wall Street officially flips the S&P 500 earlier in the day from negative to positive territory. Not just positive territory, my friends, all-time high record territory. That's the tail of the tape we are expecting as investors settle in for the final moment or so here on the trading day on what is not only the first trading day for the month of October, but also welcome one and all to the fourth quarter, historically the strongest part of the year for equities, but a lot going on down in Washington with a federal government shutdown and the eyes of all market participants closely watching those ongoing negotiations. That sets the stage for today's show. Speaking of the show, my friends, welcome to it. This is Taking Stock. I'm your host today, JD Durkin, live from the trading floor of the one, the only New York Stock Exchange. We are, in fact, just moments away from the ringing of the closing bell. The team from Estee Lauder Companies here to do the honors on behalf of Breast Cancer Awareness Month. And as we told you at the top of the broadcast, the tail of the tape expected to be another record-setting day for the S&P 500, the Dow 30 components, and the New York Stock Exchange composite as well. We've got Sam O'Brien on deck of Business Insider. He'll be joining us just after the bell, and a jam-packed half hour here on Taking Stock that you do not want to miss. With that, my friends, the applause has started. Time now for the closing bell. Estee Lauder is doing the honors. Estee Lauder Companies here doing the honors for the closing bell ceremonies right here at the New York Stock Exchange in honor of Breast Cancer Awareness Month. We'll take a look at the major market indexes, give you some sense for what investors had in store for this Wednesday, October 1st. That intraday reversal for the broader markets happening earlier today in the 11 o'clock hour, with the S&P set to finish up 0.3%, the Dow 30 up 0.09%, it looks like, and comparable positive territory for the NYSE composite and the Russell 2000, the small caps as well. Let's bring in Sam O'Brien, the Business Insider. He is a markets reporter to help us better understand the price action today. But let's start with what happened to September seasonality. We were always told this had tended to be the weakest part of the year to set up for Q4. Markets had a different picture in mind for the month of September. Sam, welcome to the show. What have you seen in the markets as of late?
Thank you, JD. Great to be here. Now, what I've seen and what experts will say is that despite many speculation of September being the historically weakest month, seems that resilience has truly been the theme, not of the season, but of the year. Throughout every difficult moment and all the speculation from experts regarding economic policy changes, regarding tariffs, and most recently regarding the government shutdown. It's been easy to be nervous, but markets have continued to rally as we saw today. As you noted, the very clear reversal of the S&P 500, and experts have said that says it all.
Yeah, what are you looking for specifically as negotiations continue down on Capitol Hill once again? It's the first shutdown we've had in about 7 years. Republicans saying one thing, Democrats saying something else. I personally, as a former Capitol Hill reporter, I don't know how this thing ends. What are you looking for in the markets as investors try and figure out the path from here as well?
Well, no one really seems to know, and that's where it gets a little complicated. For, well, as everyone's noted, at least most people, Donald Trump is a complicated man, and for that reason, it's very hard to really predict anything and for anyone to really say what exactly he's going to do. Based on history, we can note that the shutdown from his first term was the longest on record, I believe, 35 days. And that's long enough for the markets to be impacted. Based on what experts have said and what I've seen, it seems that the focus is on any indication that the shutdown will be resolved. However, as experts have already said, it really just seems impossible to say for sure because no one can predict what Donald Trump is going to do.
Yeah, of course. And of course, this Friday we were expected to get the September jobs report. As you know, Sam, the Bureau of Labor Statistics, they very clearly said if we have a shutdown, we may not get key pieces of economic data. Is one missing jobs report a big deal, or do you get a little bit more worried if we get several missing pieces of economic data?
Well, I believe the experts would say that it, or have said that it really depends on, well, purely the timing and for how long this data is delayed for. A quick delay, a quick shutdown, historically not likely to pose a major impact on markets, but if it drags on to the magnitude of the shutdown of 2018, what they call Trump's first shutdown, that's when experts seem to be a little worried, let's just say. I recently spoke to Mark Zandi of Moody's, and he said that if it lasts the average shutdown length, we'll say 8 to 9 days, there shouldn't be much of an impact. But if it goes longer, then absolutely it can be, because the consistent delaying of economic data, may make investors nervous, or may also impact the Federal Reserve's action in the near future.
Sure.
Everyone's focused on interest rates. Question is, of course, if the data is delayed, will they still keep going down, or will things shift in a different direction? That's really the million-dollar question here, according to experts.
Yeah, well, I still have you. 4 weeks from today, we are expected to get that highly anticipated October Fed FOMC decision. What are you looking for a data-dependent Fed in the trading days and trading weeks between now and then?
I believe that anyone in the investing scene, and this is based on what experts have said, is what we're looking for in September, which is any indication that things are going to continue shifting in a dovish direction. Now, obviously, direct language isn't really before, but more just little indications. We all saw that when Jerome Powell gave the address in September, the market surged because he gave them what they wanted
Absolutely.
to see. As far as what experts can be looking for, it really seems that we're looking for the same thing again, but with the shutdown,
Right.
that seems likely to complicate things.
Yeah.
And based on what I've been told and what I've seen, everyone's going to be focused on that, but until the shutdown is resolved, experts seem to think it's going to be very difficult to say.
For sure. We'll see what happens. Sam O'Brien, excellent guest to kick off the broadcast today. Thanks a lot for taking the time. It's great to have you on the show.
Thank you, JD.
All right, we're going to go for a walk. Josh, I'm going to hand you that. Bobby, you're going to come with me. Hello, folks. Pardon me, one and all. We're going to come right through the crowd with the live camera for taking stock. Excuse me, everyone. Hi, Anna. Can we squeeze right by you as we continue on here? Thank you. Thank you. All right, Howie, time now to talk about one New York Stock Exchange notable company here, specifically in the retail space. And we'll take a look at a State Street, pardon me, sir, for a State Street ETF as well. We'll start with a look here at Walmart shares. Pardon me, one and all. Bobby will take a look at here. Shares at WMT down a full % here on the day, although it's just 2 weeks away, 2 weeks off, I should say, from its previous all-time high. The company announced yesterday it's set to invest $300 million into a new Charlotte area warehouse. It did trade down intraday, touching its 50-day moving average. The average one-year price target for Walmart sits at 114, upside potential of about 13% or so off of these current levels. Bobby, we'll take a look here at shares of XLC. This is the telecom or communication services ETF. Meta is the most weighted name in this stock. Meta was down big today, the biggest laggard of the Mag 7, helping pull down this ETF 1.4% today. That stock is down 10% over the course of the last 2 weeks. Netflix, a highly weighted stock, helping pull down shares of XLC on the day as well. As we've already talked about here on the show so far, the government officially shut down as of midnight last night here on the East Coast. Carla Babb joins us from Washington to explain what happens next.
Hey JD, a government shutdown places hundreds of thousands of government workers on furlough without pay. Employees who are deemed essential to keep the government running must continue working, but they're not getting a paycheck either. These people range from active duty military to air traffic controllers, and yes, even the National Guard members walking around here in DC will continue their job without funding. There are a few things that still get funded in a shutdown. Luckily, people won't have to worry about their Social Security checks, for example, Medicare, veterans benefits, or whether or not the mail will keep running. Now, President Donald Trump has threatened mass layoffs in the government during the shutdown. Layoffs, he says, are directed at initiatives championed by the opposition party.
We'd be laying off a lot of people that are going to be very affected, and the Democrats, they're going to be Democrats. A lot of good can come down from shutdowns. We can get rid of a lot of things that we didn't want, and they'd be Democrat things.
Democratic leaders say they will challenge the president in court if he tries these layoffs, which they say violates the law. Democrats and Republicans blame each other for this shutdown. No surprise there. Democrats are calling for a deal which makes healthcare provisions that are expiring permanent. Republicans control Congress and say they won't negotiate on that until the government reopens. I have lived through previous shutdowns here in DC, JD, and they are typically wasteful on all fronts. Those forced to work with less resources and people get frustrated, projects get delayed, and the people sitting at home on furlough usually get paid anyway because Congress typically agrees it's not the workers' fault that they had to stay home through this. Let's put that into money. That's hundreds of millions of dollars in lost compensation each day. JD, back to you.
Big thanks there to Carla Babb for that excellent reporting out of our nation's capital. Time now for the latest in the worlds of fintech, crypto, and AI. All of the crypto majors often roaring on this trading Wednesday. Next up, let's talk about Citigroup, as the company now expects big tech's AI spend to top $2.8 trillion. That's trillion with a T, by the year 2029. And finally, at this hour, the U.S. government shutdown stalling the launch of dozens of new crypto-related ETFs, leaving approvals in limbo until the SEC can get back to work. That's the latest you need to know in the world of fintech, crypto, and AI. Let's now bring in our next guest. Walker Williams is the chief market strategist at Lido. It's great to have you here. Welcome to the New York Stock Exchange.
Thank you, JD. Great to be here.
Since I'm a journalist who asks the hard questions, first and foremost, I got to start with a fit check. What is going on here with these shoes, my man? Crushing the game.
It's October, so why not rock out the old Nike Jordans? So that's sort of the plan with that.
Absolutely. And as we like to say on the show, Nike, a great New York Stock Exchange listed company. Talk to me about how you're going about defensive posturing and how you're approaching these markets. And a day that just settled in, the tail of the tape is yet another day of all-time highs.
Yeah, it's kind of remarkable that we see these all-time highs pretty consistently. But when you see the market looking at it, there's a bunch of labor data that just doesn't tell the same story. We've seen job revisions down. For the first time in a long time, there's more job seekers than job openings. That sort of leads us to a late cycle type behavior. Hey, we got to be more defensive, we got to be neutral. We're also seeing the split in the market. There's the Mag 7, the tech stocks, much higher valuations than the broad market. They are growing faster. It's sort of be paced, be very disciplined. You know, obviously, while everything is up today, financials have been down. There's a government shutdown that's happening. The market sort of shrugged it off. We are very cautious with valuations here. Now, earlier we were talking about the Bitcoin, the crypto ETFs. Everything since the post-Liberation Day, those have been ripping in more of a speculation standpoint. But we're going back to the basics. Hey, what is a fair valuation? What does cash flow look like? What are their debt loads? Even though the Fed is cutting rates, we're very cautious.
Yeah, you talked about labor data, and first and foremost, we may not even get the September jobs print if this federal government shutdown continues another 48 hours or so. That's number one. Number two, how do you approach things like the soft data? We got a new read on consumer confidence yesterday from the Conference Board, and we had this split between hard data, which tells one picture, and soft data, which tells us something other. How much stock, no pun intended, do you put in the soft side of things?
The soft side is a good sentiment indicator. Like, if you think about, like, business owners, their sentiment isn't great. The other thing that we've seen here is sort of transitioning into soft and hard data. We've seen $1 trillion of stock buybacks this summer, right? That can lead to you can extrapolate that down. Okay, hey, I could return value to shareholders, or I can buy back my stock and use it to finance transactions later. Now, when we talk about CapEx, you talked about the Citigroup number. That's a massive spend. We are seeing massive spends continue in AI and other tech infrastructure. Across the economy, though, it's not at the same rate. And so when we're sitting there, you see the sentiment data is coming down, people are softer. We had a massive dislocation in that a year ago, where sentiment was negative, but everything ripped up. Right now we're paying more attention to it, but you really do need facts and figures. And when you talked about, hey, we might not get a print there, that is going to be an interesting conundrum for investors. Because then it's all the soft data, because you're not getting that sort of critical check from the government.
Yeah, I didn't get to mention at the top of the show, but we did get the ADP private payroll print today, the biggest decline in 2.5 years, shedding 32,000 jobs. ADP does not usually equal Bureau of Labor Statistics numbers. Sometimes there's a correlation, sometimes they're way off.
Well, they're way off. And even if you go back to the August non-farms payroll print, that was very muted. So we're seeing that trend continue, which leads to softness. Now, the market is very, a softer monetary policy is very helpful. However, it's something else is happening here, which I think we should talk about. Yes, when you think about debt, the front end of the curve is coming down and still looks very attractive. However, something's unique happening on the longer part of the curve. It's very range bound. Why? Well, there's a huge deficit projected. There is inflationary pressures. There is sort of more stagnant growth. So you're seeing this sort of relationship between short-term and long-term play out, and it's not really always agreeing with each other.
Yeah, since you mentioned valuations earlier, are you in that camp right now that's a little bit worried about where valuations are? I personally was very surprised to hear Jerome Powell even answer it last week, because he doesn't touch this topic, and now he says they're fairly highly valued. Gave us something to think about. How are you approaching that conversation?
There's aspects of the market that are very, very highly valued. And when we think about the broad market indices, the S&P 500, and I break it out into the Mag 7 and the rest, like the Mag 7 has valuations on average forward PEs in the 30s. Some names way higher than that. And the rest of the market is sub 20. Now, on the headlines, you're seeing mid-20s average returns, depending on the day. I haven't calculated it today, obviously, with the new high. That dichotomy split is something to watch about. Now, the future doesn't repeat itself, but there's similarities. There's other primes in the market where we've seen these kind of valuations, and it's a challenge for returns over the long term.
History does not repeat, but it does rhyme.
Yes, it does.
That's why we pay attention to historical trends. Walker Williams is Chief Market Strategist at Lido. I am very grateful for you being on the broadcast today. Thanks a lot for taking the time. Great to have you.
Great speaking with you, JD.
Folks, don't go anywhere. Much more Taking Stock live from the trading floor of the New York Stock Exchange coming up after this, including the latest on startups, raises, and rounds, and an interview you do not want to miss with Trevor Burgess here on IPO Day from the team at Neptune. More Taking Stock after this. Welcome back to the broadcast. Today in the world of startups, raises, and round headlines you need to know. First up, fintech giant Revolut is reportedly considering a blockbuster $75 billion dual listing in both London and here in New York. Next up, Zijin Gold International raising more than $3 billion in Hong Kong, surging 68% on its first day yesterday in the world's biggest IPO since May. And finally, let's go. We're cooking now, folks. Flood insurer Neptune going public today right here at the New York Stock Exchange under the ticker symbol NP, $20 a share, raising more than $360 million in the process. And joining me now, Trevor Burgess, CEO of Neptune on IPO day. Congratulations and thanks for being on the show.
Thank you. Happy to be here for my second time.
Okay, can you tell me about the day in the life of a CEO on an IPO day at the New York Stock Exchange? What did this day look like for you, and what does this mean to you and the team personally?
This was a fantastic day for my employees. It's been 8 years of amazingly hard work building our technology, building the platform, and it was so nice to have so many of them here celebrating with me. And I got to tell the story of Neptune all day, and on a day where the government was shut down. And we compete with the government every day for flood insurance. The biggest flood insurer in the United States is the NFIP, the federal government, and they were closed today. So that happened to be good for us.
Absolutely. What more should people know about Neptune? Even if they're casual followers of financial news, they wake up, they see the great new ticker symbol, they see the IPO listing, but they want to learn more about your core products and what you offer.
Listen, we're a really interesting, different kind of insurance company in that we don't take risk. What we do is build technology that underwrites risk for global insurance companies, and we do that in the flood market. Listen, in the state of Florida, only 13% of the houses have flood insurance. In the United States, it's only 4%. Our job is how do we get way more people insured for this very dangerous peril? You look at what happened in Texas in July, look at what happened in North Carolina last year. Flooding is just this devastating event. Big hurricanes cause big problems. Neptune's there to help protect your home.
Yeah, what would be your expectation as we head not just into Q4 and now that you are a publicly traded company, but the broader need across the country? You just identified so many crucial communities who continue to be in pain, who continue to badly need products and services like yours. What does the next year or so you think look like for Neptune, now saturated or positioned as a publicly traded company to help so many of those communities?
You know, being public and being listed on the New York Stock Exchange gives us this global reach, this ability to tell Neptune's story, to educate insurance agents and educate consumers that their homeowner's policy does not cover the risk of flooding. They need a separate policy from Neptune to protect their home. And we've got a month left of hurricane season, right? We don't know what's going to happen. Late in the season, storms like to go in the Gulf. That means everywhere from Texas to Florida can potentially be at risk. Now's the time to make sure your home's protected, get the insurance you need. Once hurricane season is over, we'll be focused on how do we ensure the rest of America get way more people insured before next season begins.
What can you now do as a publicly traded company, especially here at the New York Stock Exchange, that you feel maybe you could not quite do previously?
Well, number one is visibility. Our ability to tell our story, talk with people like you about Neptune, about the need to insure your home is just amazing. This is my second time taking a company public on the New York Stock Exchange. I knew when it came time for Neptune to go public again, we were going to be back here on the floor.
Talk to me finally before I let you go, some of the key differences that you feel most separate Neptune in your space, in your ecosystem from other competitors.
Yeah, our main competitor is the NFIP. They stop at $250,000 of coverage on your home. We go up to $7 million of coverage. The average home in America costs $400,000 to replace. 250 grand isn't even going to rebuild your house. Neptune provides the right level of coverage to really protect most Americans' most valuable asset.
Trevor Burgess is the CEO at Neptune, joining us on a history-making day for his company. It's not even the first time he's done it. Thanks a lot for being here.
Thank you.
Congratulations on the IPO day. Folks, don't go anywhere. Much more Taking Stock coming up after this. And after a quick break, we'll bring you the latest from Money 2020's very own Scarlett Sieber. Don't go anywhere. More show after this.
Welcome back. I am Scarlett Sieber from Money 2020, and on this installment of Everything is FinTech, Zachary is Backery, baby. He's here. Zach from FinTech, Zach from Money 2020, and what we're going to do is we're going to take every company that's listed, the 2,000 roughly, from the New York Stock Exchange, and explain why, not in this segment, but throughout the time, why they're actually a FinTech company. You ready, Zach? So what you got to pick something from here. You got 30 seconds to tell me why that company's actually FinTech. If not,
oh,
you
I
don't
want to
hear that noise.
I don't
so
want
let's
the
go.
buzzer.
Show me what you're working with.
All right. Krispy Kreme. All right. That's not FinTech.
That was pretty good.
All right, come on, moving on. So Krispy Kreme trades under Donut, or D-Nut, I should say. Why is Krispy Kreme FinTech? They do have a rewards and loyalty program. I know that much. The more Krispy Kreme you buy, the more Krispy Kreme you can get. There's a lot of beauty in that, right? I know you can purchase ahead of actually picking up in the store. We love that kind of like embedded payments angle on things.
Embedded finance, baby.
Yep. And then that's really all I had. I talk about a stretch. That
Okay,
one's,
that's
I mean,
all.
everything is FinTech, but that's
That was a stretch of that.
a little bit.
All right. Okay.
Little bit. Speaking of,
My
I was just gonna say things that Krispy Kreme eaters can't do. Stretch. Sorry.
That was pretty good.
Scarlett's turn.
I love Krispy Kreme, but that's fine. Norwegian Cruise Line Holdings, aka
Ooh.
NCLH. Well, okay, there's a lot here.
What are
First
you,
of
like,
all,
Swedish?
I'm Scandinavian, so Norwegian is like within my blood, kinda, but we're blue and yellow, not the Norwegian, but it's fine. In any case,
You associate.
all right, are you timing me now?
Yeah,
you got
you've
30
been-
seconds.
yeah, yeah,
Oh,
yeah.
you okay. Anyways, okay, so
All
Norwegian.
right, I'll give you 20.
Okay,
Here,
so
go.
fine. So they also have loyalty, just like Krispy Kreme in that way. But when you're on that cruise, you can't really go anywhere else. You're stuck on the ship. So you got a closed loop payment system, baby,
Yeah.
at its finest. We had Disney the other day. Similar thing here. So there's a lot that you can do. You don't need to bring your money. You don't need to bring your phone. It's all on your wrist.
And it's like a, I don't know if it's exactly an RFID chip or what exactly, but it's like a piece of like Internet of Things technology. It's actually pretty cool.
It's the
right?
same as Disney. Disney
Yeah.
does the same thing.
Yeah.
Closed loop payments at its finest.
And that's like, it's similar to the Starbucks thing, right? Where like you're basically like depositing funds into a thing that then turns into almost a stable coin, Norwegian Cruise Line stable coin, right? And then you can use, it's like, I just made gift cards a lot sexier is what I just did there, but that's
Okay.
interesting.
I'll take it. And with that, we stretched there, but I'll go for it. With that is this episode of Everything is FinTech. If you have other companies you want us to talk through, see why they're actually FinTech, make us look a little bit crazy, then put it in the comments. We're here for it. Back over to you, JD.
Welcome back to the broadcast. The remaining minute or so, I want to get you quickly updated in case you've missed what has happened here on Wall Street today for participants across the major market indexes. The S&P 500 finishing in all-time high record territory, up 0.3% on the day. The Nasdaq Composite up 0.4. The Dow finishing up in record high territory, but only fractionally for the trading session, while the Russell finishing up 0.2 as well. Tomorrow here on Wall Street, 8:30 a.m., initial jobless claims, and of course we will all continue to watch ongoing negotiations out of Capitol Hill. 9 a.m. tomorrow, NYSE TV Live and FinTech TV Live both counting you down to the open. That's going to do it, and we will see you tomorrow.
Woo!